What is going on? Welcome to my channel. Today I kind of have a spicy topic to talk about. For those who are new, I mentioned this a lot in my other videos, but let's get started with introduction first. Welcome to my channel. I'm the covered call guy, and my goal here on this YouTube journey is to create $120,000 in annual passive income. Right now, using covered call ETFs, I will dilute and diverge and expand my portfolio as I reach my goal. But right now, I'm just using covered call ETFs to reach the $120,000 annual passive income goal first. My projected annual dividend / options income right now is about $76,000 a year, 6.3K a month, 1.4K a week, and about $200 per day. Legal disclaimer before we start this video: this content is for informational and educational purposes only and should never be considered financial, investment, or tax advice, because I am not a licensed financial advisor, investment professional, or tax expert. All opinions expressed are my own and may be inaccurate or incomplete or just flat out wrong. So please always conduct your own due diligence and consult with a qualified licensed professional before making any financial or investment decisions. Remember, guys, I am just some random idiot you found on YouTube, and I could be completely wrong. I'm just YouTube certified, so take everything I say with a grain of salt. All right, with that out the way, today's video is, oh my god, is it going out of business, right? Liquidation confirmed from Defiance ETFs. Guys, I've been saying this. If you have to question and ask about leverage or margin, stay away from it. You don't need it. You got to do more studying. You don't need this stuff, okay? You have to be careful with what you're doing, especially with leverage or margin. I say this all the time for those who are not new, but for those who are new, what do I say with leverage? What comes after leverage? Liquidation. So today's topic, the video, is going to be just a essential guide to key dates, shareholder impacts, and the failure of leverage long plus income model. We'll be talking about that a little bit. All right, RIP, R-I-P, Defiance ETF, the official death notice. All right, my friends. The ETF world is brutal right now, right? It's characterized by a relentless cycle of innovation, quote, and consolidation, right? So just January 2026, I've already witnessed a massive consolidation event involving Tidal Financial Group and Defiance ETF, with a whole bunch of these issuers just pumping out these garbage ETFs, right? It's following the trend, the memes. You guys have to be careful. And for those who don't know much about the Tidal Financial Group, do your own research, do your own due diligence. This is the perfect time for you, especially for those who are new, to look back on a little bit of history. And if you're lucky enough, if the people are nice enough to leave a nice report in the comment section below, giving you hints, well, maybe they will, maybe they won't. I know a lot of my subscribers, or viewers at least, leave the comments and they know a lot about Tidal Financial Groups. So, you know, if you're new to income / covered call ETF investing, I encourage you to do your own due diligence before jumping in. All right, so what does this mean? This just marks a definitive strategic pivot for the issuer, right? I'm going to be giving you an exhaustive verification of my investigation regarding the liquidation of these specific funds. Right, when we're talking about at least 5 leverage long plus income funds that are confirmed closing. Right, let's face the reality here. Right, this is no longer a rumor. It is a strategic wipeout of an entire product line. Is this real? I checked the receipts and I conducted a meticulous review of the SEC filings, specifically the supplement of the prospectus filed form 497 Echo, right? So I also cross-reference official press releases from the issuer. My verdict is that the information presented in my analysis is factually accurate and verified. If I'm wrong, let me know, correct me, and I'll go ahead and do some corrections. All right, so as of January 16th, 2026, Tidal Investment LLC, the advisors, and the Board of Trustees officially approved this liquidation. It is a confirmed legal proceeding with irreversible consequences. My fact check here, I'm going to put here, absolute certainty comes from the SEC filing itself. It's happening. All right, the kill list. Who is going down? POT, SMCC, HOOI, AMDU, HIMY, ETHI, TRIL, LLYZ. Gone. Done. All right. So long Palantir plus income, long CI plus income, long HOOD, long AMD, long HIMS, long ETH, $1 trillion club index, and daily target 2x short LOY. All leverage and or thematic mega cap or inverse of Lily, the Eli Lilly. All right, the scope here is the entire suite of leverage long plus income product is being wiped out. So if you're holding any of this, start making your decisions. Start calculating. If you already done it before this video came out, good for you. Hope you made the right choice. I hope you made some money out of this. Start worrying about taxes also, because that could also have hit you, right? So once that sale, I think it should trigger taxes. We'll talk more about that. Right, the kill switch schedule, right? The board of trustees has established a rigid schedule for the termination of these funds. Deviating from this timeline is not an option for you as a retail investor. You got to be aware of these dates. The 16th announcement, the 26th trading ends, January 27th, 29th is liquidation date, January 30th is redemption. I'm warning here, the liquidity profile of your investment changes drastically as these dates approach. People will start jumping out and going away and just fleeing. All right, so phase 1, the trading sunset, right? Now to January 26th, right? This is a 10-day window, represents the final period of normal market function. During this time, the funds remains listed on the NASDAQ stock market LLC. You can still buy and sell shares through your standard brokerage account. But I'm going to say here, be warned, the internal machinery of the ETF is already shifting. People are already finding about this. They're going to know. They're going to begin what they're going to plan to do for Monday, right? Portfolio managers at Tidal Investment LLC has already begun the process of unwinding the complex derivatives that underpin these funds. I'm going to give you a status check. The clock is ticking, right? This is your only window for a quote-unquote normal exit because people will start fleeing. All right, phase 2 is the hard stop, January 26th, right? This is the most critical date for active management of your positions. Monday, January 26, 2026. All right. Cessation of trading at the close of market, 4 p.m. Eastern Time. Trading on the NASDAQ will permanently cease. The ticker symbols will be delisted, gone forever. All right. Creation, redemption, halt. Crucially, the funds will no longer accept creation orders after this date. Obviously, it will no longer exist. Liquidity cliff, right? When this mechanism is shut off, the arbitrage link is broken. Secondary market is effectively evaporated. There will be no more money. The pool is dried up, right? So this gives you a critical alert here. If you're still holding at 4:01 p.m. Eastern Time on January 26th, you are trapped until redemption. What's redemption? All right, so phase 3 is the liquidation gap, January 27th to 29th. This interim period is often the most confusing for you because the funds no longer traded on the exchange, meaning you cannot log into your app and sell. What does that mean? Portfolio conversion. The managers will sell the remaining treasury bills and close out swap agreement. All right, this will create a cash drag. The fund moves to 100% cash. If the underlying stock like PLT rally during these days, you will not participate. Your value is frozen. All right, phase 4 is redemption day, January 30th. Right, on this date, the final NAV is calculated. The fund distributes its assets prorated to all remaining shareholders. This is an automatic process. You do not need to submit instructions or do anything. You're just going to collect what you're going to collect, right? The cash simply appears in your brokerage account, usually settling 1 to 3 business days later, right? The payout, at the end of the road, your shares are gone, replaced by cash, right? Minus cost, of course. All right, market dynamics, the spread widening, right? The announcement fundamentally alters the behavior of market makers, right? We call MM for short. As the 26th deadline, January 26th deadline approach, the inventory risk increases. If an MM ends up holding shares of PLT after closing bell, they are stuck with them until January 30th. To compensate for this holding risk, MMs will widen the bid-ask spread. The implication of this, if you sell at 3:55 p.m. on January 26th, you might have to pay a significant liquidity premium to exit, right? That's the hidden cost. Don't wait until last minute. If you're going to sell now, right? The price you might get will be terrible. All right, market dynamics, right? The arbitrage breakdown. The efficiency of an ETF relies on the creation / redemption mechanism. The press release especially states that after January 26th, the fund will no longer accept creation orders, right? Your authorized participants often step back hours or days before the cutoff is to avoid operational errors. right? So if you're holding this, if you're watching this video, right, Monday, have a plan. Just set the trigger and just sell. Is what I would do, at least. Okay, don't if you know it's you know it's already going to be delisted. Why would you hold, right? So going back, this can lead to the ETF price decoupling from its NAV in the final hours of trading, right? You don't want to be stuck holding this. You might see the price drift significantly from the actual value assets. This is the risk, right? The fair price mechanism is breaking down as we speak. Why these funds are doomed from the start? At least in my opinion, the liquidation represents the failure of a specific financial innovation, right? The single stock leverage cover call ETF. They were designed to offer a triple threat, right? Direct exposure and long exposure to a growth stock, leverage, right? Amplifying exposure in 1x or 2x using total return swaps, and income, selling daily or weekly options to generate yield, right? So I personally found that this structure is internally contradictory and structurally fragile. I think that's the flaw. You cannot amplify the upside while systematically capping it with options. All right. Also, the path dependency problem, right? I talk about this a lot for the leverage, and if you're, it works the same way as when you kind of margining yourself, right? This is the fatal flaw here, is the interaction between leverage and capped upside. The cap, your selling calls cap your upside. If the stock rises 10%, you might only capture 5%. Plus the leverage drop. If the stock drops 10%, leverage amplifies the loss to negative 20%. Over time, this is asymmetry creates a performance drag. You participate fully in crashes but are capped during recoveries. This results in severe NAV erosion. Guys, this is why you have to be very, very aware of leverage. I say this a lot in all my previous videos. I try to get you guys to understand this is not something you want to be going in on if you know nothing about leverage. I talk about this a lot, especially if you're new, you're coming into the income investing space. Be aware. There's going to be a lot of hype. There's going to be a lot of people telling you, oh, it can go to the moon. You can 2x your money in just 6 months. If it's too easy, if it smells like a scheme, it's probably a scheme. So beware. Right? Why these specific assets failed? I think Supermicro, SMCC, right? SMCI faced governance and accounting questions, right? This increased borrow costs and swap rates, eating directly into your yield. Palantir, Robinhood, these are momentum stocks, right? They have violent rallies. The income strategy sells into these bursts, capping you right before the biggest move. And then ETH, right? ETHI is redundancy. What spot ETF ETF available? Demand for complex future-based products just diminished. Right? It wasn't really too big to begin with, right? The whole crypto winter absolutely destroyed. I want to say destroyed ETHI, right? Leading to mismatch, right? Capping the upside of momentum stock is a product marker mismatch. Be aware. You've been warned. All right, Tidal's operational mess, right? So I dug into the context a little bit. I think Tidal Financial Group is undergoing operational stress right now. Just weeks before this announcement, they had critical errors. So I found on January 12th, ONDL, right? $800,000 dividend was posted, artificially inflating books. Tidal had to halt trading and restate NAV. And again, before that, January 8th, for the SMCC era, Tidal determined the NAV calculator was incorrect and had to be restated. This mass liquidation appears to be systematic exit to reduce operational surface area and remove funds prone to errors. My context here is Tidal is cleaning house after embarrassing operational failures. And for those who don't know Tidal Financial Group, do your own due diligence before you go ahead and jump into ETFs that uses them, as option advisors. You might not like it now. You might like it. You might take the risk. Completely up to you. Someone in the comment section might actually know more than this and leave a comment, maybe a more educated information and details. I just know a little bit enough to say, you know what, if it's Tidal Financial Group handling the option strategy, I'm just going to step back. That's just me, okay? That's just me. I'm not hating on anyone or anything, right? I'm not trying to get sued here and say the wrong things. But just me, I like to have their own internal options team. All right, the tax man's hump. My research, okay, my research, I'll emphasize this, right, confirms that liquidation is a taxable event. I could be wrong. Correct me if I'm wrong, right? I think it is. The payout is treated as a sales of security, right? And it gets triggered. Capital gains over losses equals liquidation proceeds minus capital cost basis. My warning here is that final check might be split between return on capital and ordinary income. So just be aware, you will likely receive a complex 1099 form when stuff like this happens and you don't know what you're doing, especially if you're new to the income field. Please, I would say just hire an accountant to handle this. That way you don't fall incorrectly. And now the tax man, Uncle Sam, is after you. Right, the wash sell trap. Right, this is a critical risk. I would try to warn you about. If I'm wrong, then I'm wrong. If I'm not, do a little bit more digging. My scenario here is that if you hold PLT at a loss, you allow it to liquidate on January 30th to realize the loss. Then you immediately buy PLTR stock or calls. This is the trap. The IRS could argue this is substantially identical positions. If you buy another leverage PLTR ETF, the wash sale is definitely triggered, disallowing a loss deduction. I am not a tax accountant. Go call one, a qualified one, to make sure this is correct. This is just what I think will happen. That could lead to a tax trap if it is correct. Don't accidentally wipe out your tax deduction by rebuying too soon. Okay, I could be wrong with this. Just a huge disclaimer here, okay? I could be wrong, so don't listen. Just don't be reading this and leaving my videos on mute, because I'm saying I could be wrong here. All right, deep dive, the distribution illusion, right? High headline yields, mass deterioration. In practice, I found early distribution often include rock, NAV decline, reduced future earning powers, income become mechanically unsustainable. Right? Investors misinterpret high yield as economic income. Instead, the yield is often just accelerated NAV consumption. I say this a lot in all my videos. I don't dispute this. Right? You have to look at the quality of the cover call ETF. Right? This leads to illusion. You're just getting your money back taxable while the fund shrank, and this is why, they're done for. Right? The cash drag opportunity cost. Right? As mentioned, the fund moves to cash between January 26th and January 30th. Right? My risk, I think, if AMD reports earnings or announce news during this 4-day window, AMDU shareholders will be sitting in cash and will miss the move entirely. The benefit, though, if the market does crash, you are protected. Okay, I'll give you the pros and cons here, right? For investors who want to maintain exposure to underlying thesis, holding through liquidation is inefficient, all right? This leads to opportunity costs, right? Sitting in cash during a bull run is a painful way to end an investment. Have a plan. Know exactly what you're trying to do here. All right, my final verdict and recommendation. I always talk about this in almost all my previous videos about leverage, right? What comes after leverage? Liquidation. Now we're seeing it, right? The liquidation of these funds is not an anomaly. It's a predictable outcome of product design failure, right? High income, high leverage, and concentrated exposure cannot coexist sustainably. My recommendation, if I was holding any of these, right, you face a binary choice. Selling before January 26th offers certainty of price and immediate liquidity, exit liquidity, right? Waiting for redemption eliminates commission costs but locks up your capital and exposes you to uncertain final costs. For most of you, if you're holding on this, exit prior to January 26th is the most prudent course. All right, that's what I believe. Not financial advice. I think if I was holding it, this is what I would do. All right, final verdict. If I were you, if I was holding this, get out while the market is still open. Don't go down with the ship. Thanks for watching. Stay liquid, stay safe, right? Don't forget to like, comment, subscribe for more ETF autopsy. If you want a specific ETF, let me know. Leave in the comments. I will do them. Okay, I'm trying to reply to as much as everybody. As you know, I've been getting spam. But comment below. Were you holding any of these bags? Let me know in the comments. I'm very, very curious. Okay, thanks for watching, guys. Stay tuned. Catch you guys in the next. Love you all.